Hello, my dear family and friends. I'm excited to continue our discussion on this updated, new, and very practical and easy to implement system for trading and investing that I've started sharing with you through the last three videos. And we're going to continue that with this number 4 video. And in this video, we're going to basically talk about how to find uh, the instrument that you're going to trade, find its price at a level of oversold and overbought. And remember, our strategy is really simple. We basically want to buy something that is oversold and then sell it when it reach overbought positions. And but before we do that, please take a moment and read this legal notice. And everything that we discuss here, please keep in mind, is for education. Of course, education is very important for doing anything we like to do. And here we're discussing this education as part of creating your trading plan. So you have a very clear system as how to implement it. And then, of course, it takes learning, practice, and this is what I encourage you that when it comes to trading, always paper trade because there is risk in the marketplace. And even though we study the charts from what happened in the past, and it may or may not happen in the future, but then by paper trading, you begin to see those patterns yourself, and you will build confidence as when to take those trades. And then when the time comes to trade with real money, I really encourage you start with very small amount of money that you can actually lose. And the trade is when money comes in, emotion kicks in. And so it's important to keep that emotions out, and that's why we discuss having a personalized and a successful trading plan that allows you to trade without, hopefully, with no emotions or little emotions that does not affect your trading. And so with that said, let's continue our discussion. Now, please keep in mind, in everything that we do, we need to learn first. But the learning sometimes, takes discipline. Not sometimes, actually, all the time. And that's the hardest part of learning is discipline. And I thought to share with you about this interesting study that was done. That basically, when we study like about 30 minutes, and that's as much as the length of my videos goes, we normally focus only 8 minutes of that 30 minutes on really hearing what's being said. The rest of time, there's a tendency for our mind to, to wander around and not to be focused. And so again, that's why I think taking notes is so important, and that helps us to focus more, and as well as reviewing what we study over and over again for those parts that are important to us to stay with us. And the other part of the study was that that in 21 days, basically, all we're going to remember of what we learned today is only about 3%. And that's really amazing that even in 3 days' time, we're going to lose 80% of everything we learn. And out of that 20%, we end up with only 3%. And so again, that's why practice and studying is so important to reinforce and to remember the things we study. So I really encourage you, make at nights, whenever you have a few minutes free time, maybe in the beginning about an hour or so, and then once you get better, maybe 30 minutes. And then when it comes to actually trading, you'll see it only takes 5 to 15 minutes for you to see, look at the charts and be able to decide if you want to make a trade for the next day or not. And if so, you can set up your trade at night and then let it be, go to your work tomorrow. And so then the fastest way to learn, as you know, is to have a mentor. And that's why, we go to school, we have teachers. And that's why someone wants to learn to play piano, they have hire a teacher. If someone wants to play football, they have a coach. And so that's important to have that. I personally have studied with many great traders, and I have a mentor that I study and follow closely. And you also need at some point to have a mentor. Now, hopefully, you want to study with me, and I'm happy to share with you the things I've learned over the years. And what a mentor does is help us to cut down our learning curve. Uh, When I first got started, I did not have a mentor, and it took me years of studying and trial and error and experience to begin to understand what's going on with the financial markets. And I do encourage you to keep a diary. That way you can see when you look at the chart, when you're ready to take a trade, why you took that trade, and when you exit, why did you exit that trade, and if the emotions got involved or not. And hopefully this way then your learning curve becomes very quickly. And with this new improved system, anyone, even if you're a brand new person, a matter of, I would say, 3 months or so, you should be ready to go making really successful trades. If not with the real money, at least with paper trading, then you can see, this system works for you or not. And so then I do encourage you then, keep that in mind at some point. You need a good mentor, and if you get a chance to study with different people, that'd be great. But ultimately, it's good to work with someone closely, and that way, you know, you improve and cut down on your learning curves. Now, if you remember, we went over this from Jack Schwartz on the last video, and basically he said that try and build a house without a blueprint, doesn't work. And the same thing with trading. And in the trading, then we need to. I'm sorry. Let's go forward again. And then in a trading, then we need to have a trading plan. And basically, you need to have your own personal strategy, and we're going to discuss that. Some different really nice strategies, and you pick the one that best fits you. Also, with a specific money management, this is really key. And when to enter and exit a trading plan. And also that reminds me of a very good classic book called Think and Grow Rich by Napoleon Hill. He studied the lives and success of people who were very successful at his times, and what he discovered that pretty much all of them had clear goals and written goals, and they also look at those goals often and maybe every day and affirm them. And so they be reminded of those goals. And the same thing true also for trading. I really encourage you to have clear written goals as, why you're doing this, how much you like to make. We're going to be discussing making weekly and monthly income from our trading or managing our retirement plans. And so it's good for you to also be clear in terms of what you expect and see how your progress moves forward. Now, I basically simplified what we just talked about into 4 steps. And this becomes overall our trading plan. And of course, you can modify it in terms of other criteria like what you like to trade or what time you like to trade or how much you like to make as part of your trading plan. But the core of our trading plan is this right here I'm going to discuss with you. And this plan, I want to practice it till you get at least 70% success rate. And like I said before, when you start doing it with real money, please start with a very small amount of money. And the reason for that is 90% of all new traders lose money. And that's because of lack of education and emotional trading. And what our goal is that we can avoid all that by having a clear uh, trading plan that shows you exactly when to look for a trade, when to get in, when to get out. And also the way we've made it now is to really cut down on the learning curve. So literally, as soon as you study these videos and understand them, you should be able to start paper trading. So let's look at number one. Number one is we want to qualify trade. So first, of course, you need to decide what financial instruments that fits you, fits your budget, fits your character. There are thousands of different stocks. We're going to narrow them to a handful of stocks. There are different way of trading. Just buy the stock or buy the option on the stock. There's forex trading. There's futures trading. So the first thing is to narrow and qualify that, and it's always wonderful to keep things simple, that is easy to understand and follow. And then we're going to qualify them in the sense of we want to find prices that oversold and or overbought. And we're going to discuss that in a minute, how we do that. Now then, we have three strategies once we qualify a trade in terms of when to get into that trade. And I've called them aggressive, moderate, and conservative. And I'm going to discuss the conservative with you mostly in these videos. And that conservative strategy gives us about 70% of successful results. And then all you're going to do is that at night, sit down a few minutes, look at the charts, and see which one fits your criteria of qualifying here. And then you basically set it and forget it. And you don't need to sit in front of a computer all day and try to fix it or do anything with it. You just set it and forget it. And of course, we're going to set alarms when the time comes for us to exit the trade. Now, and that's the thing is very also important as part of this system is that before you take a trade, we need to look at our exit. That means if it goes against us, how much loss am I going to take? Now, we want to make these losses as small as possible and cut them fast, cut them short, so we don't have huge losses. So we're going to put an alarm when it comes close to where our loss is. So that time, you can look at even at your cell phone and see what's going on with the market. And if it's time to exit, you can exit for a small loss. However, we're also going to have predefined targets. We're going to show you exactly where the gains should be. And that way you let the winners run. And again, we also put alarm at the point that you need to exit your trades. And again, when the alarm hits you, and it could be alarm, could be after a few days, or it could be the same next day. But that's really all it takes for you to manage these setups and these trades. Now, when it comes to the loss then, and this is what I call number 4, proper money management. It's probably the most important of all these 4 steps. And we want to keep our loss, maximum loss, to maximum 1% of your account size. Now, we find out actually, we don't have this loss all the time. If anything, our loss is more like 25% of this 1%. But then even if you do lose completely, that 1% on every trade is going to take you 100 trades before you deplete your account. And so then let's say you have an account size of $5,000. And so your maximum loss would be 1% or $50. Now, once you get some practice and you want to increase it to 2%, okay, that would be $100. Or if your account maybe is smaller than the 5,000, maybe it's only 1,000 or 2,000, and you feel like the loss is not enough, doesn't allow for the movement in the in that marketplace to give you enough time for it to go up and down against you. And then, okay, you can go with 2%. I suggest you keep that the maximum and don't go beyond that. Now then, once we have our maximum loss, we can also decide the size of each trade. And so then, if our maximum loss is $50 and we lose about 25% of that, so we have a trade size of $200. And of course, if you using 2%, that would be $400. And last time when I was discussing this, I kind of mixed both the trade size and maximum loss together since I had them on one line. And so as I'm making these videos, as I notice something is to be clarified or made simpler, then I'm happy to do that. So today, hopefully, this makes it much simpler and easier for you to follow. So we have these four steps that we need to follow religiously. You have to make it so we can keep the emotions out. And remember, we are humans and we do have emotions of fear and greed. And so when you especially work with real money and we see profits going your way, that's where greed kicks in. You want more, you want more. And then what happens a lot of times, market drops and you even lose that. Now, sometimes it even goes against you. And that's where you're losing money, and then fear kicks in. And again, you make bad choices. And so we want to avoid all that. And so then by having a very clear cut, 1, 2, 3, qualify a trade, find a place you're going to enter, and know exactly when you exit is so important to make this practical and simple. And by doing this, then this becomes very doable and simple, becomes mechanical, and that's how you want to trade it. And almost with no anxiety, so when you go to bed at night, you don't worry about your, stocks are going against you or if the trades are going against you or not. And by winning, and again, you're going to get about 70% success rate, you're going to build confidence, and that's so important. And then, once you have a basic understanding what's going on, then managing your portfolio is really a matter of a few minutes a day. You can do it anytime and anywhere. You can do it on a cell phone. You can do it on a laptop. And that's what becomes so wonderful about trading. To me, is the best home-based business there is, because you can take your laptop, go sit by the beach in the summertime, and enjoy the beautiful day outside, and at the same time make your trades. And the way we do it is really simple. Really, you need to look at it at nights, and then a couple of times when the alarm comes, look at the setups and exit your trades. So having said that, then now let's look at how we qualify a trade in terms of finding the oversold and overbought prices. Now, part of that, of course, is finding the right instruments for you. But we're also going to talk about regression lines and the standard deviation. Now, some of you may already understand what a standard deviation means, but let me go over it briefly so we are on the same page. Let's say you're going to buy a house, and you get an appraisal done, right? So appraisal may go back 3 months, may go back 6 months, may go back a year. And so it depends on how long you want this appraisal to be done. They're going to come back and tell you, okay, there was a house sold at this price here. There was a house sold at this price here. Let me make this maybe thicker and a different color for you. Okay, here. So then maybe a price sold here, price sold here, price sold here, price sold here. Maybe 2, 3 here, another 1 or 2 here, over here. So you may find prices all over the place. But then if you average this out, and if you get 50% of the value above this line and 50% below, this becomes the fair market value or the mean. Now, where would you, at what price would you buy the house you're looking to buy? Do you want to buy at the mean, or you want to buy it here, which is some people have sold, or you want to buy it here where some people sold it less expensive? Well, I would prefer to buy it here. Now, one standard deviation is if this is the mean right here, and from here to here, this area, if roughly 70%, actually 68.2, but you may hear me say 70%, so 70% of all the prices that was sold falls in this range here. So if you buy your house at this point here, you bought it literally about 35% less than the average price. Now, 95.4% will be even further out. That means 95% of all the prices fell in this range here. And so if you buy your price here, you literally, bought it like 47% or so cheaper than the average price. And so when it comes to stock, then the stock prices go up and down. We're going to have the mean line here, so we know what the average is. We're going to look at the price. We know where the 1 standard deviation is, and we know where 2 standard deviation is. And we're also, if you down here, we know 1 and 2 standard deviations are. This is, of course, minus. These are plus. And so when we look at the price, see where it's at, we want to wait till it gets up here. We want to buy it. Well, here, actually, we want to sell it at this point here. We want to buy it when it gets down here. And then when it gets up here, we want to sell it. Now, you're also going to learn you can also sell to profit, not just to exit a trade. And so you can also now go the other way and make money going down. So we can make money going up, and we can make money going down. Okay, so that's how we're going to discuss this. And then also the reason we encourage you just have a few financial instruments you look at is so you can begin to understand these patterns. And so when that particular stock that you're looking at or financial instrument, some of them goes to around 70%, some of them goes to 95 percentile, and so you know exactly when to look for that trade that's set up to make the trade. And so then we're going to go look at the charts, and I'll show you how we set this up. And but also I want to remind you, every Sunday night we do have free webinars to discuss these teachings. And if you have any questions, please send me an email, swingtrade to financialfreedom@gmail.com, and I'll be happy to send you a link or answer your question. So let's look at some. Okay, so here I've opened up my Thinkorswim platform, and I hope by now you've downloaded it. And here I'm on this page here. Up here in here I have a Starbucks, and this is set right now on 1 year daily. And so I want to look at this chart and find out if it's overbought, oversold, if I want to trade this or not. So what we do here then, we're going to go to Studies, click on the Studies, Edit Studies, and then here on the left side, you're going to put down Standard Deviation Channel. You see it shows up right here. You click on it, and you add it twice. And so here, the first one, you can see here it says deviation is 1, length 21. And then down here, you can see it says upper line, I have it red. Middle line, I have it pink. The width is 3. Lower line, the width is 2. The same as upper line, and lower line is green. And I say OK. A second one, now I want to make it 2 standard deviation, so I change the 1 to 2 basically. And now I make the lines a little bit thicker so it stands out for me. The middle line, I keep it the same. The upper line, I make it into 4. And now, if I apply this, I have it. So here we are. These are what we call regression lines. And the middle one, the pink one, is really the fair market value. 50% of prices are up, top 50% below. This is based on 1 year daily. All right. So what does that tell me? Over the last year, we see now the price is above the mean. So automatically that tells me it's overbought. And the last time we'll see it came over, but same area, and then it went down. So it's a good chance this may go down, but we're not sure yet. We'll discuss how we decide when something turns around later. But it hasn't got quite to 1 standard deviation. It is the highest price has been at 75.63. So now I'm going to save this whole setup. I'm going to save it so I don't have to go do this again and again. I say style, I say save style, and here I put down here, for example, let's call it class. You can give any name you like, and I call it standard deviations. And then here you need to say include patterns and study set. Now we have it. Now we're going to discuss that. I like to look at 3 different charts when I want to decide on a trade. So up here it says, you see this little box here, it says 1. I'm going to click on this little arrow here and make it 3. All right. So here you can see there's a red here, it says 1. So if I change all this to red 1, I'm going to see the same Starbucks showing. But you see I have a different charts here. So now I want to make them look the same. So I come on the middle one and I click, go to style, load style. Now I'm going to do class standard deviations right here. All right. Now the same thing here, style, load style, class standard deviations. Now, I like to have different time frames. In this here, on the last one on the side, I'm going to make it 20-year monthly. And here, if you click on this here, you already have some preset time frames, but you can customize it. And I like to have, 1 year weekly. I like to see 3 months, sometimes 6 months daily. I have here 90 days, 1 hour. I have here 10 days, 30 minutes, 10 days, 10 minutes. Basically, you set up the times that you want to look at, and I'm going to show you how I use this. And so this one here, I make it 20-year monthly. The middle one, I want to make it 1 year weekly. And this last one here, I want to make it more like 3 months daily. Now, the one at the far left here is what I call where I try and find my directions. And if you remember last time we talked about it, that we want to find stocks. Let's enlarge this. We want to find stocks or financial instruments that if we look over like 20 years, we see they have a nice uptrend. Now, as you know, market waves, there are buyers and sellers. So when it starts at some point here, there are people buying. At some point, people want to take profit. It comes down. Sometimes comes down a little bit, sometimes a lot, and then goes back up. People buying it, and then it goes back to a certain point, comes down again, and does the same thing. And you can see the same things happen here. For example, it came up here. People took profits, came down, went up, came down, went up, came down. Now, if you draw a line here, the last time he came here, didn't quite make it, came down a little bit here, then he came and broke this level, went higher. So this has a very nice patterns to it, very clear. We don't want to see patterns are like this. This is, it's not clear. It's like fishing in a dirty water. You can't see anything. We want a patterns that either going up nicely or coming down nicely. And we're going to discuss these patterns more as we look for setups. But then right now, looking at this 20-year, we see that's one standard deviation and it's the highest point. And the other thing we talked about before is that these candles, you see these candles, we discussed them briefly. So then here, we see this is like a normal size candle, but this month right now hasn't moved so much. And it shows it's getting tired. Now, other videos will follow this and we'll see, if it's going to turn around or not. But this is what I look for on the monthly chart. On the weekly chart, then what I'm looking for here is that if it's going to continue going higher, now this here, it's already at this point here. So for a new person, I don't recommend trying to buy this to go higher as possible, may go even higher than here. But what we want is that for now, it has a nice retracement. Okay, and when retracement happens, then we want to come on this weekly here, find it at 1 or 2 standard deviations. So as you can see here, it came down here, and here hit 1 standard deviation. And this is exactly what we're looking for. So when we look at the, once you have a few stocks that you choose or financial instruments you're going to trade, then, you really don't even have to look at the monthly anymore. All you want is the weekly here, see if it's come down to 1 or 2 standard deviations. And but then we use this if you're going to look at something brand new to qualify it or not. So now when it's over here, then we look to buy it. Now we're going to discuss this more other videos. For right now, I just want to show you, this is qualifying. This is finding this setup here. And then on the 3 months daily, let's make it a little bit larger here. Once the monthly as the weekly at this level here, then we're going to start looking for trading this. So this is for last 3 months, so I'm not saying that. If you want to see it, we can go to 6 months. So here, still we don't, looks like it about here. 47, this is 54. If I go to 1 year, let me see if I find the same thing. Yeah. So here, at this point here, you see the same thing happens on the on our daily chart as well. Of course, when you're looking at it every night, you're going to be able to see this right away here. But the reason I don't want to use one whole year here, I want to see what's happening more in the most recent time frame, like like the appraisal. You want to get the most recent one. So I go with 3 months here, and that way, when I'm looking at this, I see a more recent activity going on here. So right now, then you see he is right on the mean average price here. So of course, we're not going to take any trades because this is already gone above this point here. So please write this down. This is a good stock to look at. The other one we're going to look at is AT&T. These are really great stocks that I work with, and I've qualified them. So we're going to clean all these. There we go. So now if you look at AT&T here on the monthly, let's see what we see. All right. So here, you see price came down here, and then started going back up. Okay, now it came back down. It went up to 1 standard deviation coming down. So you can see it went to 1 standard deviation. Before it was 1 or 2 standard deviation. And this happens. You're going to begin to see in most stocks or financial instruments, when they get overbought, they're going to come down. So then you can see the same pattern happen here. So there's a good chance it start going back up again. And so you can see that here started going up. This is on the monthly chart. So now we're going to look at the weekly. So what's happened on the weekly? Let's enlarge this. There you go. So you can see now at the weekly, before when it got to 2 standard deviation, came down, went back up, came down, now it's back up here, and this whole week, I can see, is being red. That means started up here and closed here. Of course, this week is still active. It's not finished yet, but as of today, it's over here. It's gone this low, and it's here now. So this is great. This is a great setup for selling. Again, you can do this with options, but we haven't discussed options yet. But this is a good setup in terms of selling right now. But if you're not comfortable with selling something, then all you do is wait for this to come down. Again, to down here, you can see it comes down to 1 or 2 standard deviations, and then we look for it to buy it again. So now we can also look at the daily chart. And you can see here then, it was going up here, then it got tired, had this small candle here. Now you see a big gap here. This is what happens, it closed on Friday when people, market open Monday morning, what happens, there's pre-market trading. And here he had a dividend also and paid dividend, but for some reason market dropped. So when the market opened at 9:30, called the cash market, it started up here, went this way down, closed here. Yesterday it went up. Actually, this is today right now I'm looking at, looks like it. So it's right now at this point here. So now we're going to also discuss more in the future for you how a market waves. So basically, it went up here. Now, this is the highest point. It came down here. Now, it's going to go back up, and then it's a good chance we'll come back down to this level here. And unless it goes back, break this, it may go higher, but again, it's a good chance we'll come back down. So it looks like to me then, market, this AT&T is headed down right now. And we'll follow this. And what's nice, I'm going to be looking at this same stocks over and over again every week. And so you can follow it with me. And so the other stock that we're going to look at here is Visa. All right. And again, I'm going to clean this drawing sets here. Now, if you look at the monthly, you see again, very nice, strong, moving up. You look at weekly. Again, once you qualified, all you need to have is 2 charts here. So if you're using like a laptop, then you should be able to have these 2 charts on your computer. And up here, instead of 3, you make it 2. If you make it 2, then you have them. Just 2 of them. And even you want to have just 1, and then you can just have 1 and then change the time frames. You can mark them. For example, if you're just using the daily here, let's say you're looking at the daily and you have a small laptop and you want to make some drawings, and here's a drawing says, let's say you want to put a line here. So you say this was the last high point here. Okay. So we have it marked there. Now if you go to the, change it to weekly, the line is there for you. And so you can even just use, 1 chart if you like. I have a big screen, and so then I can look at all 3 of them very nicely. And so then, again, it's going up. So for those who want to buy Visa, this is oversold. Overbought, and it's not a good time to buy this. Let's look at Apple. Many people like Apple. Again, let's say we look at here. You can see his drop is going back up. Looks like a pretty strong movement going higher. And the weekly has gone up again. So because it's bought here, we're not going to do anything with it. We want to wait till he comes back down here. So see how fast you can look at the charts. Let's everybody look at Amazon. They like Amazon. Let's see. By the way, Amazon is $1,800 right now, so not many people can trade this right now. Okay, so Amazon, as you can see, is very expensive, but we're going to discuss options so you can trade them with options. The smaller ones like AT&T, for example, and let's even put down another one here, Procter Gamble, see how much that is, $100. So if you can buy it or smaller shares of something, then you can do that. If not, you don't trade it or you learn to do options with it. So again, here's another stock that I follow, Procter Gamble. Again, is overbought, as you can see here. So thank you so much for being with me today, and we'll continue our discussion next week. I look forward to talking with you soon. Have a great day.